Good evening students, welcome back to AHSEC tutorial. So today I am going to discuss regarding capital account. Okay. So this account is opened in the books of the firm to record the amount of capital contributed by each partner. The capital of a partner may be either fixed or fluctuating. Where the capitals are fixed, two accounts are prepared, that is capital account and current account. You see here, this is the capital account. Okay, so here in the credit side, okay, the amount of capital introduced into the business is recorded, like the opening balance, okay, and the additional capital. Okay, and in the debit side, the withdrawals are recorded, okay, which reduces the balance of capital in the business. So to cash bank account, okay, this is the closing balance of capital. Okay, so this is the pro forma of capital account. Okay, now you come to the next, okay, that is current account. So current account records all drawings made, okay, by each partner, interest on drawings, salary to partners, interest on capital, share of profits and losses, etc. are passed through this account. So pro forma of current account has been given below. So current account of whom? Current account of the partners. Okay. So in case the partner's capital is increased, then current account is credited, and if it is decreased, okay, current account is debited. So here you see opening balance. In case of credit opening balance, it is credited. Interest on capital is given to the partners, so it is credited. Salary, commission, profit and loss, profit share from PL Appro is all credited. Okay, this increases the capital of each partner. And here you see opening balance, okay, it is debited. Drawings, okay, it reduces the capital of the partner. Interest on drawings is an expense of each partner, so it is to be debited. Share of loss is debited to balance CD. Got it? Now you see where the capitals are fluctuating or floating. So where the capitals are fluctuating, okay, all entries relating to increase or decrease in the capital of partners is done through the capital account opened in the name of each partner. So where the capitals are fluctuating or floating, only one account, okay, is prepared in the name of each partner. One capital account. Okay, you just see here, this is the capital account. Same, okay, so drawings, interest on drawings, share of loss is debited. Okay, opening balance, okay, if any, then additional capital introduced, then interest on capital, salary, commission, PL, okay, these all are receipts of each partner, so these are to be credited. The share of profit is credited. You have understood, okay, the pro forma of capital and current account, okay, when the capital is fixed, okay, or the capital is fluctuating. So I hope you understood. Okay, if you like my video, please subscribe to my channel. Thank you.